Hello, dear viewers. Today, I'm going to share a very special trading strategy with you. If you aim for financial success and it's your first time on this channel, subscribe right away so you can stay up to date with the latest and most profitable trading strategies. This channel has been a source that contributed to the success of millions of investors, helping them achieve their financial goals. If you stay with us, you could be one of those success stories. The strategy we're about to teach you today could be a real game changer in trading. But this is just the beginning. Don't forget to like this video so more people can see this valuable content. Also, share your thoughts or questions by leaving comments. Your interaction means a lot to us. So, are you ready? Let's embark on this journey together. Don't forget to subscribe, hit that like button, and leave a comment. Now, we're ready to dive deep into this profitable trading strategy. Let's get started. After optimizing the indicator settings, let's first take a look at a long position example. Rule 1. To start, observe the RSI top and bottom indicator. Look for a green line with a positive divergence. This signal suggests that the market is gearing up for a bullish turnaround. However, it's crucial to note that it might not be strong enough to initiate a trade just yet. Rule 2. Moving on to the next rule, focus on the HH LL scalper indicator on the chart. You should see the price bars crossing below the nearest red line generated by this indicator. This red line serves as a support level. Rule 3. Now, let's talk about the third rule. To initiate a trade, you'll want to wait for a candlestick to close above the green resistance line. The closing level is important here. Once this condition is met, it's time to enter the trade. Now, regarding your profit target, you have some flexibility. You can set it based on your own trading preferences, whether it's a 1, 1.5 or a 1:2 risk-reward ratio. This means for every unit of risk you take, you're aiming for 1.5 or 2 units of reward. But here's the key, always remember to set your stop-loss level. It should be positioned below the most recent swing point formed on the chart. This helps protect your capital and manage risk effectively. Let's take a look at another long position. Rule 1. First, the RSI top and bottom indicator should display a green line with a positive divergence. This signal indicates that the market is approaching a bullish reversal but is not strong enough to enter a trade. This suggests that we need to take a closer look at the market. Rule 2. Now, on the visual chart, the closest green line generated by the HH and LL scalper indicator must be crossed upward by the price bars. The nearest green line represents a resistance level. This indicates that the prices are gaining upward momentum, signaling that it's approaching the time to enter the trade. Rule 3. To initiate a trade, we look for a candlestick that closes above the green resistance line at its closing level. The initial target level can be set based on the trader's preference, such as a 1, 1.5 or 1:2 risk-reward ratio. For risk management, it's essential to position the stop-loss level just below a recent swing formed on the chart. This ensures that we have a clear exit strategy in case the trade doesn't go as planned. Alright, let's dive into Rule 1 for initiating a short position. Imagine we're having a chat about it. So, Rule 1. To kick things off, we keep a close eye on the RSI top and bottom indicator. What we're looking for here is a red line with a negative divergence. Now, this is a signal that tells us the market might be gearing up for a bearish reversal. But remember, it's like a warning sign that says, hey, things might go bearish, but we're not there just yet, so hold on. In other words, it's a heads up that the market is showing signs of potentially turning bearish, but it's not quite strong enough to start trading in that direction. It's like the first step of a journey, and we need to pay attention to see if it develops further. So, that's Rule 1 in our short position playbook. A red line with a negative divergence is the initial clue of a possible bearish shift. Now, let's move on to Rule 2 and see how it all comes together. Alright, let's discuss Rule 2 in our short position strategy. Rule 2. Imagine we're having a chat about trading. So, we're looking at our chart with the HH LL scalper indicator. What we're keen on is finding the closest red line it shows us. Why is this important? Well, that nearest red line acts like a signal. It's showing us a support level. Think of support as a floor. When the price bars cross below that red line, it's like the floor giving way. In Rule 2, we're keeping an eye out for the moment when those price bars cross down below that closest red line. It's a confirmation that the market might be leaning towards a bearish trend. It's a team effort between the indicator and the price bars, signaling that the bears might be gaining ground. But remember, we're not trading just yet. We're still observing. So, Rule 2 is all about the price bars crossing down below the nearest red line, suggesting we're getting closer to a potential short trade. Let's keep the conversation flowing as we move on to Rule 3, where things start to come together. Let's talk about Rule 3 in our short position strategy. Rule 3. This is the moment we've been waiting for. We're watching for a specific event, the closing of a candlestick that crosses down below the red support line at its closing level. Think of it like a door closing in the trading world. This closing action initiates our trade, but we don't rush in blindly. We have a plan. Our initial target level for taking profits is something we decide based on our trading style. It could be a 1, 1.5 or 1 to 2 risk-reward ratio. It depends on your strategy. However, risk management is crucial. That's where the stop-loss level comes into play. We position it just above a recent swing point on the chart. So, Rule 3 is all about that candlestick closing below the red support line, signaling the start of our short trade. It's about having a clear plan for taking profits and managing risk. With these rules in mind, we're ready to navigate short positions. Let's get started. And as you can see, this trade had two different outcomes. Traders who set a risk-reward ratio of 1 to 1.5 reached their target, but those trying a 1 to 2 risk-reward ratio unfortunately exited the trade at their stop-loss level. It should be remembered that in the world of trading, there's no strategy that guarantees a 100% win in every trade. Let's take another short position example. Rule 1. First, the RSI top and bottom indicator should display a red line with a negative divergence. This signal indicates that the market is approaching a bearish reversal but is not strong enough to enter a trade. Rule 2. The closest red line generated by the HH LL scalper indicator on the chart must be crossed downwards by the price bars. The nearest red line represents a support level. Rule 3. A trade is initiated by closing a candlestick that crosses the red support line downwards at its closing level. The initial target level should be determined based on the trader's preference, such as a 1, 1.5 or 1 to 2 risk-reward ratio. The stop-loss level should be positioned above a recent swing formed on the chart. In this trade, traders who opted for both targets came out with a profit. Dear friends, the conditions for this strategy may not come together frequently, but if they do, you may have caught a strong trade opportunity. It's especially one of the rare patterns that can be captured right at the beginning of a trending market. If you enjoyed the video, please don't forget to hit the like button. Until next time, goodbye.